and talk to you about the real estate play, which is in focus after the FI buying in bulk deal yesterday, and that is MAN Infra. MAN Infra stock will come up on your screen. Mr. Parag Shah, Chairman Emeritus at MAN Infra, is joining us to talk about the roadmap of the company from here on. Mr. Shah, thank you very much for your time. I won't talk to you about the block deal which happened yesterday, but we would be very keen to understand how the profitability outlook of the company stands from here on. We understand that yours is a realty company which operates in the environment with very conservative practices. You don't believe in leveraging the balance sheet much. You have very clear focus on high profitability. Talk to us more about it.
Good afternoon. See, we are into real estate also. We are into EPC business also. We are doing the infrastructure port project at Vashiva, which we are doing since 25 years. We are doing EPC for our own construction site, which is approximate. We have in a pipeline for 1.5 crore square feet for next 5 to 7 years. And most of the projects which we are doing in a real estate is a redevelopment or either on a DM model. So it's an asset-light model is there, where the investment is very less. We are doing South Mumbai project, which is the tallest tower in India. It's approximately 312 meter height, which is first time in India. This height will be there. The work has started already. There we are working on a DM model. So our investment will be hardly around 250 to 270 crore rupees, which has already been invested. We are not expecting any further investment over there. We are doing project at Ghatkopar also. We are starting a new project, which is also a satellite model. It's an infrastructure project or it's a redevelopment project. And we expect a very high response in Ghatkopar also. We are working at 8-9 locations in Mumbai. At present, we are focused in the Mumbai market only. But approximate 1.5 crore square feet jobs are there in pipeline. All the work is already started. Thank you.
Right, Mr. Shah, this is Vinny joining in the conversation as well, and a very good afternoon to you. I want to pick up the point that you highlighted in terms of the Ghatkopar property that you were talking about. It's a luxury residential property. What is the revenue potential that you're seeing coming in from this? How much is it that will be adding to your top line?
On a lower side, we expect 1,200 crore rupees turnover in the next 3 to 3.5 years' time. The work should start in next 3 to 4 months' time. The permissions we have already applied for. So we are expecting the work should start by this October, November. Once the work will start, within 3 years, the job will be completed. Approximate minimum 1,200 crore rupees is the sale we are expecting. It may go to up to 1,500 crore.
Parag bhai, talk to us about how the visibility on your profits is. Because, yours is a company where perhaps looking quarter to quarter performance may not be suitable. It is better to look on a yearly basis. And if I were to ask you visibility of 3 to 5 year on your profitability, given a blended mix of these projects, EPC, all put together, then what would you tell our viewers? I saw you did about 260 crores for the year gone by. So from that base, how's the roadmap looking?
Without considering any new projects, whatever the jobs which we are having already in hand, we expect that we will be able to maintain this profitability. Maybe some 15-20% you can consider more also. So last year we did a PAT of I think 459 crore rupees, which we are expecting that we should cross this year also, and next 4 years also is very good because already the work has started, the sale is good. We have zero debt. Hardly we have some 60-70 crore rupees debt from various banks. That also we are just maintaining the banking relationship. So we are very much confident that we will be able to maintain our profitability.
Also, just in terms of that tallest tower that you're talking about that will be made in India by the company, what does it actually mean for the company? What will it add in terms of value for the company? How is it shaping up for the company?
We have taken the project on a DM model. So we are going to get the fees of 12.6% on a total sale. plus we are getting 14% interest on the amount what we invested by us. Over and above that, we are getting EPC margin of 10%. So total expected sale is approximate 4,500 to 5,000 crore rupees. That will not come in as a top line in our book, but on 5,000 crore rupees, 12%, approximate 500 to 600 crore rupees, we are expecting in next 5 years, which will be my top line and bottom line will be same, because that's the net profit.
My goodness, that could be very meaningful for the company, and I'm surprised at the way your company is trading at right now, just about 15 times in a sector with your kind of profile, profitability, low debt and high visibility. Wonder why the gap, and it'll be interesting to see how valuations actually pan out from here on as more and more people in the market realize the visibility which you're talking about. Thanks very much for joining us.
Thank you.